Hey there, investors. Are you looking for the perfect ETFs to grow your wealth passively in 2025? Whether you're saving for retirement or just starting in the stock market, today's video will break down the top 5 ETFs for passive investors that offer diversification, stability, and long-term growth. Let's dive in. For those new to investing, ETFs or exchange-traded funds are one of the simplest ways to invest in the stock market. Think of them as a basket holding a variety of investments like stocks, bonds, or commodities. You gain exposure to a diverse group of assets with just one purchase. And the best part, they're low cost, easy to trade, and perfect for passive investors. In 2025, ETFs will continue to shine as a top choice for anyone looking to grow their money without the stress of picking individual stocks. Now, let's go over the criteria we use to pick the top 5 ETFs. Low expense ratios, because high fees eat into your returns. Diversification, to spread your risk across industries and regions. Historical performance, a proven track record matters. Suitability for long-term investing. Consistency is key for passive investors. Using these criteria, we've curated a list of ETFs that can help you achieve your financial goals. Let's get started with our first pick. Kicking off our list is the Vanguard Total Stock Market ETF, or VTI. This ETF gives you exposure to the entire U.S. stock market, from large-cap companies like Apple and Microsoft to smaller, up-and-coming businesses. With an ultra-low expense ratio of just 0.03%, VTI is a fantastic option for anyone looking for a one-and-done solution to investing in the U.S. market. Next up is the iShares MSCI ACWI ETF. This one's for investors who want global exposure. ACWI tracks over 2,400 companies across both developed and emerging markets, giving you access to the world's economies in a single fund. Its expense ratio is slightly higher at 0.32%, but the diversification you get is worth it. From tech giants in the US to growing industries in Asia, this ETF has it all. For those who love dividends, the Schwab US Dividend Equity ETF, or SCHD, is a must-have. This ETF focuses on high-quality companies with strong dividend histories, making it ideal for both income and growth. With an expense ratio of just 0.06%, SCHD is one of the cheapest ways to add reliable income to your portfolio. Plus, it's great for reinvesting those dividends over time. If you're a fan of tech, you've probably heard of QQQ. This ETF tracks the NASDAQ 100, which includes some of the world's most innovative companies. From artificial intelligence to electric vehicles, QQQ gives you exposure to industries shaping the future. While its expense ratio is 0.20%, the growth potential here is massive. Finally, we have the Vanguard FTSE Emerging Markets ETF, or VWO. This ETF targets emerging economies that are experiencing rapid growth, offering high upside potential. With an expense ratio of 0.08%, VWO is a cost-effective way to diversify into markets outside the US and Europe. While it's a bit riskier, the long-term rewards can be significant. So there you have it, the top 5 ETFs for passive investors in 2025. Whether you're looking for total market coverage, global diversification, or high-growth opportunities, these ETFs have something for everyone. Vanguard Total Stock Market ETI, Schwab US Dividend Equity ETF, Invesco Q Trust, Vanguard FTSE Emerging Markets ETO,